There we go. Thank you, Jonathan. All right, Laurette, it's all yours.
Laurette Clash with Pike County Management Services. And I'm excited about presenting this because it made me think about what would I want to know? I mean, what would be most helpful and what could I take away? Here's some information. Once again, you will be getting this information for your reference, and and I'll be available to answer any questions that we're not able to do here. So let's get started. So financial goals are essential. I think Anna alluded to that at the beginning. And in our business, we have to have goals. Otherwise, we're just getting up and going after whatever the day has for us. And that's even so clear with financials, because if your goals are not clear, then you will always be searching for where's my money going? How much came in? And it won't only be about people doing it, it'll really be about you managing that as the business owner. And that's part of being that CEO. It is really, that's part of your decision-making process of the many things you have to make decisions about. So let's talk about that. So why do goals help? They help us keep focused. You measure the progress. That's one thing about numbers. They don't lie. They tell you the truth. So numbers are very quantifiable. So if you have numbers in front of you, you know where you're going. But the goals actually tell you where you want to end up. You stay motivated. I think numbers are emotional. Our personal money is emotional, and business it is, and it doesn't change. Now, the fourth one here, I can't promise it'll make you not procrastinate, but there's something about having a step one, a step two, and getting a goal. And that's where you want to have that. You'll achieve more because when you have goals, you know where you want to end up. And I think we talked about this lastly, personally. Your goals help you determine what you want in life. And a lot of our personality is in our business. So from there, businesses without goals, they struggle. And here are the common factors. And if you identify with any of these, don't raise your hands. It's okay. But insufficient capital. If your finances are not in order, you're not going to get any money. You're going to be challenged. Poor cash flow management. That means you don't know how much is coming in, or really, I would like to say this, most business owners know their numbers in their heads, but they don't have it on paper. And that in turn turns into poor cash flow. That leads to the third one, record keeping and controls. The record keeping, the bookkeeping is the key to your financial. All that data, you can make a lot of decisions from that data if it's put in there properly and in an orderly fashion. Improper product pricing. That's another issue that influences our finances. If we're lowballing our products and it's going to, and our expenses are higher, it's going to be apparent. And then uncontrollable growth. Oh my God, all of a sudden, all this money's coming in, you have no SOPs, no standard operating procedures in place, and all of a sudden, what do I do? What do I do? And then you're stuck. Or if anything, you lose out on opportunity. So not having a financial goals is more powerful than I can imagine. But of those five, we're only going to talk about one. We're going to talk about cash flow management. I think that is probably the most key element of running a business. Because if you can forecast through a goal what your cash goals are in a business, and then put together a strategy to how to reach those goals, more than likely you'll get closer to those goals than not. But cash management is so key because now you are managing your money. It's called currency for a reason. It's always moving. So your role is to manage it. So Who wants to read this, this Dave Ramsey quote? Somebody read it for me.
I will.
Okay.
You will either learn to manage money or the lack of it will manage you. Dave Ramsey.
I don't know why he could have put $100 bill there, but it would have meant the same thing. Either your money is managing you or you are managing it. So what is cash flow? It's the movement of cash in and out of a business. So what we want to talk about is how can we manage this money in and out in a functional way, in an efficient way, and in a quantifiable way. So I'm going to take you to the word that most people, oh, this is the other one. Who wants to read this one? Missy. Can you read this for me?
Tell me, and I forget. Teach me, and I may remember. Involve me, and I learn. Benjamin Franklin.
The reason I like this scripture is because his business owner, or his quote, is because he's saying as business owner or whatever we do, we must stay teachable. We must always be looking for ways to improve on. And that's, Missy, I think that's just right in line with what you're doing and what everyone else is doing, because as your business grow or an aspect of your business grow, you're gonna have to learn it. And Jonathan, you're doing the right thing, because now not only you have to learn it, now you have to teach someone else how to do it to free you up so your business can grow. So we must always stay teachable, or the student. So we're going to talk about guidelines. We're going to give some encouragement, and we're going to talk about profit first. So guidelines. So the guidelines here is the B word nobody likes, a budget. And a budget is you telling you what to do. The budget isn't telling you anything. You are creating the budget so you can get where you want to go. And there are many tools that you can get for free. Your accounting software will have a budget that will help you manage the rest of the year or set goals. And there are some of them very simple. Some of them can be very complicated, but I would say keep it simple and easy. And the one we're going to talk about today is, I think, one of the easiest one to put together. And it's called an actual budget to meet your annual goal, because it's based off of historical transactions that you are now using to measure how you're moving forward. And what we do is, and this is a good example, it's April. January, February, and March has been completed. You have all that data that you can line up and then create a monthly budget. And in that budget, there are two components that you want to look at: fixed amounts and variable amounts. And fixed amounts are they're the same amount every month, and variables are different. But the reason I explain this, because most business owners, when you see it on paper, you know exactly, no, that's not right. It should be this, it should be that. And that's the importance of creating a budget. And what it could look like is something like this. So here we created a profit and loss. We put January, February, March. This is not a real company, it's a sample company. We got a total and we divided that figure by 3 months. And now we have an average for the month. Now you can go in here and tweak it and make it more realistic, but now you have something to measure April by, and then so forth and so forth. But the key is, this is only helpful if you have an annual goal. Otherwise, you're just watching the numbers. What was your goal for 2022? You know, some of your goals are still the startup phase. So now you have to be controlling where you're spending that money. Some of you guys are adding on personnel. So have you forecasted what that could look like and what costs that would entail, what income you needed? Once again, there are amazing resources. And that's one thing I wanted to point out. You do not have to go back to school if you don't want to. There are so many resources out here. And one I found very helpful, and it's with Wells Fargo's work. Wells Fargo work, you do not have to be a customer. And if you go to Wells Fargo work and small business resources, they have all this information available to you, credit and financing, cash flow, financial management, planning, operations, insight, and it even has one for women owners. There are grants there, and this is all free to anyone who wants it. Here's an example about cash flow. 8 tips for small business cash flow management, creating a cash flow projection. All this information is available to you, but it does require an investment of your time. And I think that is the key element why businesses are not as financially literate in certain areas, because it takes time. I still have to study. I'm still learning. I don't never want to stop learning how to do something better that'll make things more efficient and more accountable. And money is, I mean, you have invested in this money of your time. The money is sort of kind of the reward of your investment. So as an encouragement, if you have set a goal for 2020, if you spend 4 hours a week reviewing your finances, I guarantee you will go back and readjust your financial goals. And what does that mean? That means, you're looking at the money coming in, you're looking at the expenditures, you're looking at when you spend your money, because sometimes we spend our money too fast. And people don't realize that. I was guilty of that myself until I discovered, wait a minute, I could create a cash flow, and my bills were not late. I just planned differently with my cash flow. The other thing is to look at small business index of your industry. Where are you in your industry in regards to profit and expenses? This is nothing different. You can look up in your industry, whether it is in the comics, the creative writing side of it, or creating a new product, or the retail side of it. You can find out where you are by looking up small business index and saying, and you can even drill it down in Pasadena. People similar to me, similar size. Now, if you have a niche, it does not report that, but it'll give you a ballpark, because now you'll have your information and you can compare it to industry. And so you'll know where you're at. So also becoming part of, getting information about your industry will help. Finance is really about staying informed about the industry you're in and monitoring your money. Beyond that, then it just tailored to what you do. And I don't mean to simplify it, but really that at the end of the day, that's what it takes. And then I want to add here, these were two, I think, really innovative books. I don't know if anyone has read either of these books. If you have, let me know. But Profit First basically says, take your profits out first, put it in a separate account, take your taxes out first, and then you pay your operations. And it's basically turning the profit and loss upside down. And what's really great about this book, I think for non-financial people, it makes sense. Because if you say, I want to make, 20%, but you're not, you can start off with 2%, and put that away. And then you put money away for whatever taxes. Then you pay yourself, and then you pay your operations. What do we typically do? We get sales, we get our operation, and then whatever left over is what we pay ourselves. And we pay ourselves last, which we shouldn't. But what this does is it makes you think differently about your profit and loss. And that profit you put away first is in an account. Union Bank is a good one for businesses. You can open up a business account at Union Bank for free. So you don't pay any fees because you don't want to go to another bank and pay fees. So, but this other book by Susanna, I haven't read, and I wanted to post it because it was for minority-owned businesses. And so this is my new homework to read this book. And basically it's the same thing, but I think it's going to include challenges we have that are not, just being a business. But I think it's a good resource. So once again, I know you probably wanted, we got to do this recording, we want to do all of that. I think all of you know that you need to record all your business transactions. If you've prepared your tax returns, you've already known how to do that. Where most businesses need is now, how do I now have a roadmap for my finances? How do I create, SOP, standard operating procedures for my finance? And how do I position myself to grow my business by putting away profit? So that when I do decide to take a capital loan, I'm taking it because I want it, not because I need it. And when you get into that position, and it's not, people think, this is going to be a lot of work. Many of you, I've already been impressed by how you explain how your business is growing, what your strategy of your business is. Now, let's put that in numbers. So it makes sense, not just to you, the internal user of it, and the external user of it. So I want to open this up for questions that you may have that I might not have covered, or questions on things I covered that you have additional questions.
Okay, great. Laurette, do you want to pause your PowerPoint for just a second so we see you full screen? There you are. All right. So you're welcome to just raise your hand, or there we go. Ray's got a question for you.
Yeah.
I just wanted to, could you repeat that? You said that you put your profit away first.
Mm-hmm. So
and then what was, I know you said put your profit away, and then there was something, and then you said pay yourself, because you were saying you don't pay yourself last.
right. So to answer your question, the first thing is my profit first. So I literally, every time I get paid by a client, I assign a percentage to that amount, and I put it in a different account right off the top. I'm also a tither, so I believe in tithing. But the other part was your taxes, because businesses don't plan to pay taxes, and they're a business and they need a plan to pay taxes. So that was the second one. And then of course, I'm on payroll in my company. So I pay myself through payroll. Or you can do estimated taxes, but I've chosen that route because it's a separation between my business and me. 2, I get a W-2. So if ever I had to prove my income on a personal level, I have that. And then it strengthens my business because it says my business can pay me. And now I pay someone else. And then I pay, you know what I mean? So we tend to wait for a moment. And I would always encourage people to put themselves on payroll. And when you do that first by figuring out your personal budget. And then you bring that, just like you were going to a job interview. This is how much I need to get paid. And so your business has to get there sometime. Yeah, a lot, most of the time. Let me not say sometime, most of the time. And you have to get there. So profit, taxes, and then you pay yourself, and then operations.
Oh, okay, something. You said something very interesting. You're a tither. And if you don't mind me asking, are business owners able to tithe off of their profit, or are they tithe off of what you pay yourself?
So I have chosen to pay 10% off my business. My business makes more than I pay myself. So
Profit, okay.
But when tax time comes, that full amount is deducted because you can only do $10,000 on a business. So it's moved over, and it's a choice I've made that I've done. But you can do either, but you do have a cap for your business. It's really based on how much you make too, but the business makes. But there is a cap.
Oh,
So,
okay.
yeah, there's a cap.
Okay. Thank you.
Oh,
I have a question.
yes.
So you said that the profit you pay yourself. So isn't that your profit, but you're paying yourself? So you're paying yourself and your profit, you're taking the profit?
No, I'm an expense to my company. So I am paying myself through payroll. Payroll is an expense to my company. So I don't see paying myself a profit. I'm an employee of my business.
Exactly.
So I pay myself, I compensate myself a reasonable amount for what I do in the business. But the profit is for the business side of it. So everyone has a goal, a percentage. So once you sell something for $1, it costs you 50 cents to make it. Then there's 50 cents left over. That would be considered your profit. But I don't do that. I do another percentage because I want to continue to do it. I want to be very conservative with my profit because I'm putting it to the side. I'm not using it in the operation at all. And they encourage you in that profit first to start with an amount. They said 1%. Start there. Be consistent with 1%. When you feel more comfortable, then you move to another percent. But it's in a different bank. And there are banks that offer free bank accounts. You don't have checking, you don't have checks, you don't have an ATM. You're doing all that you can to keep that money to the side. Because there might be a month or there might be a window where you need some money and now you have this money to the side. And basically you're creating a reserve, you know.
So what you're saying, you're not taking your full profit, you're just taking a percentage of your profit. Like if you, like you just use the analogy, you make $1, you purchased it for 50 cents. So you might take a dime of that profit, not the full 50 cents.
Right.
Okay.
Yeah, so exactly. So, but once again, I'm considering myself an employee of the business.
Yeah, I pay
So-
myself as well through my
Yeah.
business, but I've never taken any from my profit because I have the business expenses take my profit.
But that's why they say start with a low amount.
Okay, that makes sense.
1%. Start just with 1% and just put it to the side, just automatically. And however your cash, your income cash comes in, for you, it'd be daily receipts. 1% automatically goes over there, and then you're working with the rest.
So if you're saying you have a separate bank, say I use Union Bank, so you just transfer money in there from one, yeah, okay.
Yeah, they ask, if you read the book, it's asking for a lot of accounts, but so when I'm introduced with a tool, I take a look at the tool and say, how can I strategize this for my business? Because you can't use every aspect of a procedure. So originally they said have an account, the money comes in, which is where all your sales come in. And then from there, you move some to profit, to taxes, to operation, and to payroll. But I pay myself here. So you got to take this tool and see how it can work best in your business. You know what I mean? But implementing all the steps may not work well for you. But
Right.
I would encourage a very conservative start. 1%. You'd be surprised. I was. I was surprised. Now,
Yeah,
that
it
does not
makes
mean
sense.
I didn't have to go dip sometimes. So, but just to know that that was there, that I had that and still was paying everything else, it just like, oh wow, this is possible.
Yeah, I like that. I like the idea of it. So one other question, sorry if I'm hogging. You said, so pay your taxes, set aside for taxes. Doesn't your W-2 cover your taxes?
But that's my personal. I'm talking about the business side. So I'm an S corp, so it's a pass through. You know what I mean?
Me too.
Yeah, so it's a pass through. So I mean, I have to pay my $800, to the state
Right.
and things of that nature. It's just an extra cushion.
Okay.
I keep the profit and the taxes at the same percentage, if that makes sense. So,
Okay.
yeah.
Yeah,
Okay. No more hogging.
I think that the taxes side is really, it's critical to have a cushion, right? So you have that cushion, it's sitting there. But the other piece is that even if you have an S corp or you're a sole proprietor, you can get dinged for taxes, right? As part of your business side.
Yes.
Even if it's just at the end of the year when all of that gets consolidated and suddenly you realize that this is your income and it's treated personally and you get taxed on it. So even if you're paying yourself payroll, which is something that I do for part of what it is that I need for living expenses, I pay myself payroll and then I draw the remainder. But I pay taxes on those as I go.
Right.
So,
Estimated taxes.
So I'm paying partially estimated taxes and partly personal taxes. If you had a C Corp or some other kind of entity, then you're going to pay corporation tax. And so the business gets taxed. And if you haven't set money aside for that, the frightening part of that, I think, Laurette, is that people struggle to understand why their profit and loss, which shows what's going out, what's coming in, what's going out, doesn't match their bank accounts, right? So they think they have money in the account and they'll be able to pay it, or their profit shows to be greater than the money that they have in their bank account. That's usually the situation. And then they struggle with, why is that the case? Why don't they match up? What's going on here? So putting some money aside in the anticipation that there will be some taxes to pay, just what you described. And for some people who have employees, actually putting the payroll aside for them. Lots of companies I know do that as well. So when they come to payday, they know they have the money to pay their employees. So I think this is a great advice, Laurette. I mean, this is good husbandry, right, in managing your money.
But just to answer your question in regards to first your checking account and your books, they're not on the same time. they're in two different present values. So one sort of has already passed and one's occurring. So they're not on the same date. They're on different dates. And so that's why they don't balance. However, if you look at your reconciled summary, that one will match your register. So one is at the end of March and one will be at the end of April 25th. So they're just different time periods. So that's why they don't match. And then to add to your question in regards to payroll, I have a separate payroll account for two reasons. One, because if there's ever a question about payroll, I have a separate account for that. And all the transactions are there. So I just put in the cash value of whatever payroll is. And if there's ever a problem, it's right there. I don't have to go into operations and try to figure that out. So all the taxes are coming out, all the direct deposits are coming out, and it's just a clean separation, because payroll, you don't want to mess up with the IRS or EDD. You want to be able to get those reports, whether you have even when you have a payroll vendor, they make mistakes. You want to be able to do that separately, because those taxes and penalties on delinquent payroll is horrendous. So it's good to keep that separate.
Yeah, I think that's great advice. Well, Laurette covered a lot of stuff here. Are there any other questions about any other aspects of what she talked about where you thought, I don't know what she's talking about? So feel free to just jump in.
I have a question.
Yes.
So as you heard, I run a nonprofit, and I've been advised that we can't pay ourselves as board members.
Right.
And so that has been quite difficult, because it's all my volunteer work that this nonprofit is. And I have started a consulting firm as a result, and I'm going to pay myself payroll through that. I also had to start another, he called it a professional corporation, because I learned that I cannot get a Medi-Cal number directly for a nonprofit. I would have to get like some DMH master agreement with DMH or DPH, Department of Public Health, to be able to bill directly. So it's, anyway, I'm learning, because remember this nonprofit part, the nonprofit was a side thing that I had for another business. And when the pandemic hit, I was able to take advantage of a lot of the work that I do in mental health to grow the nonprofit. And then the for-profit that I had before, I shut down. So now I'm stuck in this gap of how do I get paid? It's really a interesting thing. And I'm having to create models right now, but is there any options to pay myself from the nonprofit at all, like as a consultant?
So who is the executive director? Because you can be an employee of a nonprofit and be the executive director, and then just be the executive director on the board. You won't be able to be on the board, you know what I mean? So
But who will be on the board?
So who else? Don't you have people on the board?
Not really. I mean, that's a bad gap. We do have board members, but they're sort of lame. They're not very active. So I'm sort of the board and the executive director, and I'm trying everything I can to try to recruit people. I really want to recruit an executive director, because I'd rather stay on the board and continue to shape the mission. I don't mind not getting paid, because most of the income, I can make income for what I do on any, I've actually been able to give the contract for my new business more often than not, when it's a speaking engagement for me or my services directly, then I've been doing that. But I just wanted to see if you knew of any options for nonprofits.
Yeah, the executive director is usually the way that someone who initiated a nonprofit can get paid, but they participate on the board, but they're not on the board. You know what I mean? They bring the board, they bring them up to date on what's going on in the operation of it. But also, I think consulting is an avenue that can be explored. And this is where Kevin Wong is the name of the CPA who's very, just exclusively working with nonprofit. It may be an opportunity. And I'm going to put it in the chat, his email. He is outstanding because that's all he does is nonprofit. So he may have other ideas. The other way would go to a business attorney. A business attorney would also be able to lead you in other opportunities or ways you could do that too. But I think the consulting is, it's a clean separation between you and the business. I think there's something good about that. And I think Kevin could expand upon that more than I could.
Thank you.
Great, thanks for that question, Nakia.
Laurette, I got a quick question. You talk about putting away the 1% profit. Do you just let that just grow? And if you ever need to borrow from it, you borrow from it, but you just let it grow? What happens to it, when it grows to be big money?
I want to find out. I mean, it's been good. You know what I mean? I think you start conservatively, and then once you know it's not there, it's a good thing. I mean, it's on my books, but you know what I mean? There's a purpose. I'm doing this on purpose with the strategy to build that, so that if I can have 6 months worth of income in there, that would be fabulous. If I decide I want to hire a new person, I mean, then I have the money for that. If I want to go to the bank and make a loan, I'm going to look more favorable that I have this money to the side versus I don't have any money and I need to borrow this money. So there are some strategic advantage of having that money to the side. But once again, start conservatively, because life is going to happen, and then you'll be better prepared.
Now, do you have a suggestion for a regular accountant? I mean, not like that doesn't feature in the nonprofit world, but just regular.
So what are you looking for? Are you looking for a CPA, a tax preparer? What are you looking for?
Right. So CPA, because I'm at the very beginning of trying to have good books.
Oh, yeah.
You know what I'm saying?
Yeah, definitely. The one thing about I've been very fortunate enough to build relationships with CPAs. And I usually ask that question because there are CPAs who niche down. They just do real estate. They do truckers. They're niching down. But I know enough who does everything. But I also look for those who do not nickel and dime the client.
Okay.
Yeah. And now a few, not many, are really starting to do consulting where they're doing tax planning for the year.
That's exactly what I need.
That's a key element that I also ask. So when I meet with them, I vet them and I interview them and I ask them questions. So definitely, I have at least several. When I say several, I have a good 5, but I know 20, but I got a good 5 that I can recommend. And my hope is at the end of the year, I will be in that list.
Join the list. So I'm guessing that Latanya would be looking for somebody who's familiar with the restaurant business.
Oh, yeah.
For a cafe, and there are specific things around that, and inventory and the kinds of expenses they have and the way that people pay for food and so on. And so
that would be perfect. So I'm also part of a nationwide bookkeepers, EA, CPA. So a lot of them have niched down. So there may be people in other states who are familiar with, the tax laws across the board. And that's the difference with EAs. EAs are familiar with tax laws. They have to know it in every state. So they're not limited to a particular state. So
what does EA stand for, Laurette?
it's an enrolled agent with
agent.
the IRS. You are basically tested by the IRS for tax liability, tax planning, tax return, and tax law.
Okay, cool. It's always good to learn the next acronym.
And is there an advantage to an EA over a CPA? Doesn't a CPA have to go through different licensing?
So a CPA is tested on the state level, and there are certain tasks that a CPA can do that an EA will not be eligible doing. For example, an audit. EAs are not eligible because they've not been tested to do an audit. They can't do a financial review, which is very common with nonprofits. I'm actually doing one with a nonprofit now, but they're not eligible to do those type of tasks. So other than that, but we can represent someone in front of the IRS. That's what we're trained to do, to take someone who's having a problem with the IRS or the state and represent them as power of attorney, because we have to pass their test, not a state test.
Okay, that's interesting distinction. That's helpful. Good to know that. Okay, any other questions that come to mind? Yes, Ray.
Would you suggest having more than one business account? Like say maybe you had an account at one bank and maybe you had another account at a different bank, like you were saying Union Bank, you can have free accounts. So maybe that's kind of like your Union Bank is where you put your money away, that business account. And then you have one that maybe is kind of more operational can you do that? Is that something you would suggest?
So before I would suggest that, I would ask, what is the purpose? Because what drove me to do it was purpose driven. So one, I started off with an operating account and a business savings account. And then once I started paying myself and getting employees, then I opened up a payroll account. And then from there, then I opened up the profit account. So once it's really based on your goals, just on opening up accounts is a little more work. But I also like that there were banks that didn't charge bank fees, because I wasn't doing a lot of transactions and I don't want to incur additional costs by having this additional account. So I went in and I looked up what banks offer business accounts that are free. And of course you don't want it with the high transactions. You want to leave your operating one for that. So the question to you is, what would be the purpose other than what I just mentioned? And that's why I opened up the Union Bank one, because it's free. I'm just depositing, to it, and then hopefully not having to withdraw anytime soon. Hopefully.
Okay. And your company, you do bookkeeping for your clients, you do bookkeeping, then you're gonna move into doing taxes later.
Yes.
And when you said, excuse my ignorance, but tax planning, so is that like say you look at your whole year, or your accountant is looking at your whole year, and depending on what you do, are they forecasting the taxes you're gonna have to pay within that year, saying maybe, if you sell things, are you gonna have to pay the quarterly? And then, of course, like you said, pay the 800, which praise God, I just paid that too. But
We all,
um, so is that what tax planning is? Is it like, okay, let's look at the year, these are the points at where you're gonna have to pay these certain taxes?
So the purpose of any tax planning is a strategy designed for that particular client. Usually they will start off with your estimated taxes, and they'll also see if you take draws. So a lot is sort of tailored to how you may be taxed and how to reduce your tax liability. So the quarterlies just passed. So if you wanted to pay your, quarterly returns, you could have looked at January through March, sort of forecasted what you could be paying. And if you didn't take any draws, they could determine what your potential liability is. Usually people, if they don't see that, they'll just put in $250 so that they can meet that $1,000 threshold. Because it's anything over the $1,000 if you owe, that you get in trouble. So if you don't take any draws, then we would do the tax liability based on your draw. So this way we would prepay your taxes on your draw. So like I said, it's a combination of things. So I don't have a answer, but those are usually the two primary things. And it depends on the type of industry. If you're, you own property, it may be different than if you're, professional services or with restaurants. And then with retail, if you have sales tax, so those are things that would be reviewed, on a quarterly basis.
Okay.
And, and they have the software, basically, they have the history of your taxes. They basically drop that information in and it could propose, because we don't get the new tax changes until November, December. So it's all forecasting. We don't know what 2022 will be like until the end. Does that make sense?
Okay.
Yeah, because tax laws can change with
Drop
the new
of a
Congress.
dime.
So,
yeah.
and that's one thing that's really great about the CPA and EA. You get constant updates of what's going on, what changes are happening. You got to put in your 200 hours of educational. I mean, there's so much information coming at you that you want to be prepared. So that's a good question, but it will be unique to you to help.
Okay.
Mm.
Thank you.
Laurette, I have another question.
Mhm.
Were you done, Ray? I'm sorry. Okay.
I was done.
Okay. Okay. So how, in the case of your business, you are a bookkeeper and you have clients that pay you.
Mhm.
So how do you base your profit on nothing that's like tangible? I mean, is it just your hourly rate? Is your expenses, your profit is what you make off that? Like, say you decide your hourly rate is $20 an hour. Your
Mhm.
customer pays you $40.
Mhm.
So your profit is 20?
So we don't do hourly rate. We do value added. So people are paying for my knowledge.
Okay.
I have determined when I do the intake of a client, I can pretty much tell you how long it should take because of how we work. We update every client every week, and every client has a set day that we work on their account. And then we have an onboardable client portal. So when we finish that task, that client gets an email saying that task is done. And then by the end of the month, we reconcile. We give them a profit and loss. And then we meet with them for 15 minutes every month to review what we've discussed or what was missing. And our client portal has been really helpful because it not only gives the client overview, it's a place where the client can put their supporting documentation. So to answer your question, I would say 95% of our clients are flat fee based. And
Okay,
so,
so where does your profit come from? I mean, what is your profit off of whatever your, I mean, like in the case of me on the two businesses, my service business, there's not like necessarily a number other than maybe my operating expenses, the rent, the products, the overhead. So let's just say that's 2,000 a month and I made 8,000. So my profit is 6,000. So is that how you base your profit?
No, so what I'm doing in my calculation of expenses, this is a great question, by the way. I'm including all my employees' hours. So once again, I go back to, I know what we're doing for that client, how many hours it should take. We track every hour, even if there were flat fee, every hour is checked. So we're watching to make sure we stay profitable. So our profit, depending on it, could run, I would say the low might be 25%. The best scenario would be the 38, 40%. That's why after a window of time, when you're updating that client over and over, your knowledge base increases. So you become more efficient in what we're doing. And so when we're communicating, we know stuff sometimes before the client knows it because we're doing that work on an efficient base. We're improving their workflow. That's the new thing we've added because we found that a lot of the bookkeeping is done so inefficiently and there is duplicate work. And when we go in, we do a client diagnostic and we review the workflow of that client. And then we make recommendations to improve the efficiency of that client because of our knowledge. So that's what we bring to the table and that's what they value. That's the value add we bring. So they know they're going to be paying this amount. With that being said, we have clients that we do straight bookkeeping. We have clients that we are the full accounting department. We do accounts receivable, accounts payable, and we do payroll. And we make sure we interact with the client. I mean, there's CPA at the end. There are some we do, mostly the law firms are like that. So, but I do have nonprofits that we do, we're their CFO. So we meet with them once a week. We go through their KPIs. We go through their expenses to make sure that they're meeting their optimal goals. So those are the services we offer because the data is there. The bookkeeping, I'm telling you, over COVID, we learned that there was so much information in the bookkeeping to help clients to look at services that needed to be or no longer profitable. Products and services that could have been grouped together to create a different cost, So
I guess I'm trying to get to my bottom line of profit. How do I decide what my profit is on my service business? With the boutique, it's even hard to gauge too, because if I buy an item for $1 and charge $2 for it, I may not have made any money off of it. In fact, I haven't made any money off of April Blooms because after my expenses, I'm negative because I'm still.
That would go back to one of the 6 items is your cost. So, and I know with the beauty salon, it is a unique because you have the products you buy, you have the rent, the operating costs without going through all of them. But you do have your cost of goods, which is the products you buy. So I would say the first place we would look at how can we reduce those costs And I don't know if it's vendor driven, if it's volume driven. We would look at your costs and look at how can those be reduced. Then we would also look at, are you priced appropriately for the service and expertise you offer? There is a sense of knowledge that all of you offer to your clients or for your products that goes beyond that product or their service. And that needs to be included because that's the added value.
Yeah, no, I think this hair salon is good as far as making a profit because the expenses, the services more than pay for the expenses. I mean, it's a little different now because I don't have operators in my salon. So I still profit off of what I do personally. So I have a based on my overhead, there's still a little bit of a profit. The boutique is the one that I don't, if you're saying I need to pay myself a profit, a percentage of my profit, and if there is no profit, in the sense of I do my profit loss, I do my, QuickBooks, bookkeeping, and by the time it's all said and done, I haven't made it profit. I still have inventory in my store that hasn't generated any income or profit because it's hasn't sold yet.
Right.
So to come up with a profit is what I'm trying to gauge at, or what should my budget be and to eventually gain and make profit.
So I would, I would go back to because I think you know what your retail store does. So I would go back to that and look at your profit and loss, but I'm be looking at the aging of your inventory. I'd be looking at the other vehicles in which you could sell your inventory outside the store. You're doing that by going to the home show.
Right.
You can do it by doing it online. I would look at what does your industry is now offering, because people are buying online.
I have an online store, so.
So how are you? So one thing you do very well, April, you're really good at customizing an outfit for someone. And if you were able to showcase that knowledge in a video where you bring someone in and you say, she's looking for an outfit for XYZ, and it's got to be quick and short. Here's what she's looking for. And you post that on Facebook, it's going to change who's now looking for you. Two, it's going to expand your geographics of who could be shopping online. You want something similar to this? Here's the outfit. Here's the dress. Here's the belt. Here's the earring. You can go order this today. You offer two things that are amazing for women: our hair and our clothes. And you should be showcasing a before and after, and then itemizing what that took with the clothes. You may not be able to do everybody's hair because they may not live close by, but I'm telling you, that is your expertise and your knowledge of the hair products. Oh my God. But the matching the before and after, that's where you are amazing at. So
Thank you, I appreciate that.
like,
Okay.
that's why I bought stuff at your place. It's like, hook me up, lady, hook me up. But I'm saying we have one thing, taking advantage of showcasing our knowledge. And I think, Misty, your creativity, I'm just saying, Ray, your having kids write journals. I mean, my goodness, that is just going to draw people like, wow. I mean, I was drawn in when you were sharing it. Imagine posting that on Facebook. Imagine people being drawn to you like, oh my God, because you're only talking about what you know, your passion, what you love, and people are going to be drawn to that. That to me is priceless. That you can't put a price on. That's where your profit comes in, when you start showcasing your knowledge.
That's great. I think that I think I'm still slightly in confusion about the profit piece. Not that I don't understand putting something aside, but I've tended to do it flexibly. Because, you know, if you look at your expenses from month to month, they can vary, and sometimes quite a bit. You know, because certain things become due, you know, they're not regular monthly expenses, they can be annual, they can be quarterly, right? All that kind of stuff. So so I tend to think of what I'm putting aside as what's left when everything else has got paid for. But I pretty much every month do put something aside. So that's my cushion. But I draw on it when I have an exceptional expense. But there's always some money there, right? There's always something there that if for some reason the client cancels a contract or something happens, right? And you need to pull on that. But I think that the theory is eluding me. So are you looking at the P&L, for example, and trying to plan in your savings, your profit savings in that P&L?
Right. So, you know what? I had the same trouble. All these same questions. I was like, how am I going to do this? It's gone before I even, and I had to rethink, and then I had to do it. Putting 1% away was probably challenging now, but now that I've grown, it's not challenging. It was just doing it the first time.
I see.
And 1% is, you know, because you're looking at the expenses, and it took a while. This wasn't like, oh, 2 months. Oh yeah, this is great. No, baby, this took like 6-7 months for me to like roll it. So it's not going to be overnight, but it is flipping. I'm an accountant. It threw me totally off. So you have to literally flip the profit and loss differently. Now, it may be different. So all my clients pay at the first of the month. So it's right there. And so what I would do is pay all my bills the first of the month and be done. I just decided I'll take that 1% off right off the top. Put it aside.
Warren Buffett says this. He says, save first.
Yes.
Then the rest of it is yours to spend on your business expenses, your personal, whatever. But save first. So it's figured, like what you're saying is just pick a percentage that you think you could do. So I know roughly how much I bring in a month, and just put that away. Right? What's the worst that can happen? You made it too high.
Yeah, don't make it. I mean, I think 1% is a good place to start.
Okay.
Because it's really quite reasonable. And putting another account where it's just going there, you know, because what would 1% be? And it may encourage you. What it also does, which it did for me, it made me look at some expenses, some apps. I'm like, oh yeah, why do I have that? I don't use that. I found expenses that I was incurring that I wasn't using. I am quite sure there are expenses that we all have that we could say, wait a minute, do I need that? Am I using it? You know, there's always something in there. And it's just finding that one. And then it's just like anything you start being consistent at, you get that mindset. Once again, I would definitely, like I said, encourage you to read the book. That is really easy to read it in a day.
Yeah. Yeah, I've got clients who've read it who really swear by it. So yeah.
Like I said, I didn't start it on 20%. Yeah, that's right. It becomes a habit. It's just basically rethinking that one thing. And just, for me, it became vacation, like, ooh, I can give me a bonus. There's another part of it that's really kind of great too. It's basically, instead of me paying my bills, and I haven't started this, instead of paying my bills all at the beginning, pay it so on the 10th, everything due before the 25th is paid, and everything on the 25th. Then, you really get to see your money, as opposed to me, I just pay everything, because I want to get it done. But they say we have a tendency to pay things, before time, but we should pay a little enough so our cash flow, we can see a change in our cash flow. So that's I haven't gotten that one yet, but I'm trying. That's the next one I'm going to try, is spread out my payables. So even though I have the money, I'm not going to be late. I'm just going to the 10th. I'm going to pay everything that's due from the 11th through the 25th. Then on the 25th, I'm going to pay everything due after that. And you say, what's the benefit in that? It's cash flow. It's basically you seeing things paid, and you're breaking it up, and now you're really looking at the expenses more. Because I don't think I looked at them when I just paid them off. You know, like, okay, I got it done, it's out of the way. Then I'm looking at the expenses. Okay, what is this for? Okay, what is this for? What is this for? You know, and that's what Profit First really does. It makes you re-examine your transactions and put value in it. Is it helping your business? Is this expense helping you get income in? And if it's not, then, you know, do you need this or do you need to change it? It's not always about getting rid of. It's about evaluating, and that takes time. So everyone's business is going to be a little different, but that's really what it does.
Yeah, I think that I like that idea. It kind of struck me that a lot of things that we pay out each month are automatic. So we don't really think about it. As long as the money's there, then we don't worry about it or think about it. So having an eye to what those expenses really are and making sure that they are bringing value to us in the business is obviously important. Okay, any final questions?
So April, if you want someone just to look at what you have, that's the least, that would be easier for you. Because
What did you say? I'm sorry.
Your retail side, I think there's a lot of potential there. You know, I've come by your store because one of my clients is around the corner, and you have amazing merchandise, just quality stuff. And I just don't showcase. I really don't.
Laurette, I'm doing basically a lot of things that you say. You know, I do outside events. I did the Wisteria Festival last month. I'm doing the Showcase House for a month. I have an Instagram presence. I don't do a lot of stuff myself, mainly because of time. I'm in the salon most of the time, and I just can't be everywhere. And I do not have the best staff right now. I'm struggling with staff. I mean, my associate didn't show up last Friday, and I was back and forth in the salon, between the salon, because I had so much to do over there. So when somebody's under the dryer, I put them, you know, I would run over there and do something really quick. There was a customer in the store who actually had to call the boutique. She called the boutique number, and I have that phone in the salon. I answered it. She says, I'm actually in your store right now. Is there anybody that can come ring me up? I mean, it was totally embarrassing, but at least she didn't take it. She wanted to buy it, but she said she had been in there for a while. I mean, this is how desperate I am for employees. So you know, and I don't know, they're not going to show up until they don't show up. And, you know, you try to call people, but it's just like, you know, people are busy. They can't come last minute. So, you know, you try to employ people so you don't have to do everything. So I am doing all that you're doing. I'm working pretty much every day. And I'm trying not to give up because it's a lot of work, because I do believe that. I do hear a lot of positive feedback. So I know it can happen. It's just a matter of when and, you know, how. But I think I'm a little more clear, because I think I was just trying to figure out the profit. You know, I don't have a profit, but I get, like, say my original monthly goal for the boutique, the first year, my daughter and I kind of put together a budget. It was $5,000. I needed that at least to kind of cover stuff. So let's just say It's not 5,000, it's way more than that. I mean, not way more than that now, but I have a minimum of what I would like to be is 8,000 a month now. Now, sometimes I make that and oftentimes I'm over that. But if I say it's 8,000, so you're saying off that 8,000, take 1% of that.
Mhm.
Right.
Okay, so that's what I wasn't clear about. So now I get it.
So you put
So
that
whatever
aside.
my
So that-
deposits are for
Mhm.
that month, that would be my 1%.
Yes.
That's
Yeah.
your one,
You're taking it right off the sales, right off the sales.
the top line. Yeah, yeah,
Right there,
Okay.
1% right off.
yeah.
Okay.
So you take your
that's-
$80. I mean, we're talking about $80
Mhm.
and you put it in your profit
Oh,
account
okay,
Mhm.
and you leave.
Union Bank, it's free.
okay, I will be doing that tomorrow.
Yeah, I think it's a great idea. I mean,
I
you're
do too.
building a little bit of cash is building up.
Just a little bit at a time.
Yeah,
You know, you
Yeah.
can feel more comfortable doing more.
yeah,
Mhm.
That's good.
yeah. I love that idea. All right.
I don't know if Nakia still has a question because her hand is
Her
still
hand's
up.
up, but I don't know if you ready, Nakia? Do you want to ask something?
Yeah, you know, I guess I'm just used to like these Zoom like the way the prompts are raise your hand, like for your turn. Yeah, I have a question about the for-profit I started.
Mhm.
I started it in November of 2021. It's a professional corporation. I did a DBA.
Mhm.
And I wonder, do I have any requirements that are, because you know how it was only November, like basically November and December. Do I have to pay the $800? Or is it, I heard that corporations formed right now are waived. So I just wonder, is that the truth or was that a rumor that from the state of California that the $800 is waived for newly formed corporation that got formed in the year of this pandemic?
Let me follow up with that one, because
Okay.
it seems like they want to hold back any money. But that's a good question. And so you're on a calendar year, not a fiscal year, right?
I don't know.
Oh, okay. So that just means, so that means your tax year is gonna be from January to December instead of November to October. I would think you're on a calendar year. But you
Okay.
could look that up too, because you just go to the Secretary of State, it'll have a copy of your form, and then it will also tell you what tax accounting year you signed up for. So
Hold on,
I'm
let me
quite
see,
sure
let
you
me
probably
see.
did calendar, because fiscal year may not have been good for you, but I will definitely look into that, because I haven't, doesn't mean I know everything, but I'll definitely look, I want to look into that. I'm not opening anything. And that was an S Corp you opened or an LL?
It's a professional corporation, a PC, but we are applying for the S Corp status so that I can do a K1.
Okay.
And so it says I was file date for statement information was 1/22. Now let me find the articles. But I just want to clarify this because you know it's a whole separate business, and you know the nonprofit, I don't have the protection of, or you know, I don't write off and the expenses and all that, and then it doesn't become my personal profit when the nonprofit makes
Right.
profit,
Right,
you know, so that's different for me. But the
Right.
file date was 11/10/2021. Where would I find on this articles? I have a articles of incorporation of a professional corporation in front of me, Arts PC.
You
Where would
won't-
I find?
You won't find it there. You actually have to go to the Secretary of State, and then you're gonna put in either your corporate number or your legal corporate name. And then if you go to file, it'll tell you right then whether you need to file or not file that, or pay that 800 or not. They would tell you that.
Okay, thank you.
Hmm.
Let's see here. She needs a CPA, you need to do this one. And this was for a restaurant, and then we'll just check on that. Yeah, that's where you go to the Secretary of State. Everything's really there, and you can find that out.
I just had a
Where
comment.
the Secretary of State? Like,
So
is
when
it business? Is it?
Yeah, so you go to business and there'll be a business search option. and you were given a corporate number, you'll enter either the corporate number or your complete legal business name, and then it will prompt your ding, and then you'll click that, and then it will prompt you to whether you need to pay or not need to pay.
Mhm.
That would probably be the best channel right now.
Yeah, that's the simplest place to find it.
Yeah.
Yeah,
Okay, I just searched. I think I found the place.
Yeah, look at you.
Let's see.
she's at it.
Oh, I found me. I found me. Active, initial filing date, stock corporation, professional. I clicked on it. Standing, all good. Entity type, stock corporate, statement of info, due date 11/30/2022. So what's that mean? I still don't know if it's what calendar year. That doesn't tell me any of that.
So you can, so on your article of corporation, no, it should be on your information. No, your first information, the statement of information.
I have that. Hold on, let me see. Statement of information. But I'm just, clarifying that that form didn't tell me that information. Let me see. So on the statement of info, it's telling me domestic stock.
Your taxes, did you file at 11/20?
No, I haven't. I just started. I haven't filed anything. I barely made any money for. I did make this year in 2022, like about $5,000. But in 2021,
Yeah, because if you filed, so you would have had to do a tax return for November and December for your 11/20. Because
I haven't filed personal taxes or anything yet
Okay.
for 2021. Because I don't know why I haven't. I'm overwhelmed over here, so I might need some help.
Yeah, so going in, but that's where you would go, and I'm gonna look, because that's just November, because we actually, years ago, when we did open ours, we had to do a tax return for the short window. We opened up in September, and we had to do a tax return for that window. I mean, we made money too, but we opened up, did the same thing. So
Sounds like a return date that's just a bit later than the normal corporate October date. So
yeah, because you opened it late, they may give you until, no, it's a tax year.
yeah, I don't know.
Yeah, it's the
Yeah,
same.
you're just fine. I mean, your first year is normally a partial year filing, right? Because unless you
Partial year
pro-
file.
yeah, unless you proactively change your date, you're going to have the calendar year is your financial year.
Mhm.
So
Yeah,
yeah,
because they're due March 15th, and then your personals, the 18th this year, and then nonprofits are due May 15th. So I'm looking to see about the free. I don't see
Yeah,
that.
I've been in a lot of like technical assistance and capacity building projects this year. And it was advised through a lot of them. And that's what made me form it, because I was like, I'm not gonna have to pay it. But maybe this is something for me to research.
Whether that's a one-time benefit, not an ongoing one.
Oh no, it was a one time. It was only it was because of COVID. It was because of trying to encourage new business within the pandemic.
But you have to pay the 800 in April.
Yeah.
Regardless of when you file.
Yeah.
I know that I did not have to pay the first year. And
Okay,
I did talk to the Secretary of State's office. Sorry to interject, but since you were on the topic, because I filed last February. And so my first year, I did not have to pay the 800, but I had to pay, of course, this year. So
right.
I don't know if they're still doing that. For some reason, I'm thinking they were doing it through next year, but I'm not sure. So, but I can just speak
Yeah.
personally that, yeah, I did even speak with the Secretary of State's office. I didn't have to pay my first year. I don't know if they're still doing
I
that.
didn't either.
Yeah.
I
It
didn't
sounds
either.
like, oh, you didn't either. Okay.
Yeah. So, and did you get something to support that non-payment so that you could have it for your taxes? So you.
I did not.
Hmm.
I would tell you that this for-profit business is my stepchild. I am trying to love it just as equally and give it as much attention, but it's slightly difficult. But I'm trying to build it so that I can get paid, you know, because this is very difficult I'm working really hard and spending my time all the time doing like speaking engagements and events and workshops, and it's me facilitating, but I'm not able to pay myself. And I'm also not able to take a draw and use the money unless I'm using it for an event or a workshop or a grant, you know. So I feel kind of trapped. So this new business is I started it thinking it was a good opportunity to be able to make income, but I didn't really think about the taxes part until I'm just listening to you. I was like, oh, maybe I should have done something. Like I didn't, it was like lost in the back of my head. So maybe I don't know if that's a service that you can do to help me, you know, file correctly for myself personally. I have not filed personal taxes yet for 2021. And I think that has to incorporate, maybe it's my first time doing the K1 for this new business, and I'm fine, but I'm behind on that.
Maybe you
I might need to file next time.
Yeah, I can definitely find out about the new businesses, whether the $800 is waived. As far as tax preparation, I would not be able to help you with that, but I can definitely help you, you know, find a CPA but do this part, because I'm now interested to see, you know, in regards to that.
Yeah. Okay, that's good. So Nakia, you've got somebody to refer to help you find the CPA that can get you straightened out.
Yes.
Thank you.
Cool. All right.
Make a quick comment, Laurette. I really, what you said tonight really hits home. I teach a lot of the same principles as paying yourself first, you know, even on the personal finance side, to put aside, you know, some percentage of your money. And, you know, before you know it, you don't even miss it. It goes away and it starts growing, and you have that emergency fund, or if something, you know, you blow a tire or something happens, you have that money already built up. So you're ahead of the game. I really appreciate how you brought that forward as a concept in terms of taking the 1% of your profits and putting that aside. It's a glorious thing to do, even in your personal finances, to have that pocket of money sitting off to the side when emergencies come up.
Yeah,
that's true. So thank you.
Yeah, it is a great vehicle. It works really well. And on a personal side, you also reduce stress when you know that you've got that money there. And if you don't have enough income that month to pay for certain things that need to get paid, you know that you have it, but you have to replace it. Right, that's the game that I play. Is like I have to replace that money as soon as I can, so it stays up at that level. So yeah, very cool. Well, Laurette, thank you you must be exhausted, but thank you so much for your time tonight and everything that you've shared and all the questions that you've answered. And I don't know if anybody from the group would like to say on behalf of the group something to Laurette about what you got out of this session this evening. Who would like to do that? Ray's going to do it. Thank you.
I'm sure everyone wants to say something, but I just thank you so much for coming and speaking to us tonight. I mean, you really got the juices flowing. And you speak in a way, you know, when you talk about budgeting and taxes and, you know, all that stuff can get overwhelming, especially when you are, a new business, like Misty and I are just starting, but, you know, it can be overwhelming for people who are established too, you know. So I really appreciate you breaking it down into a manner that, you know, is understandable and not so overwhelming. And just thank you for joining us tonight. I mean, you really made it seem like, oh, okay, it's possible. It can get done somehow. So really appreciate you, Ms. Clash. Thank you for coming tonight.
Thank you very much.
Yeah, much appreciated. And if anybody wants to add anything into the chat to say thanks to Laurette as well, then I'll pass all that on. So
Yeah,
Laurette,
this is more. Oh, sorry.
yes, Misty, please.
Oh, I just wanted to add, like, I know I just really, you know, just kind of sat back and observed what was being said during this meeting, because there's a lot of information here that, I mean, as you can hear, I'm just starting just like Ray. And when it comes to the ideas of profits and managing money, this is something I'm going to need to know in the near future, like all of these particular details, so that I'm not, you know, losing money without knowing how and why I'm losing it.
Very good. You're
Yeah.
ahead of the game.
Yeah, it's about getting ahead of the game. That's exactly right. And it's making time to pay attention to it, because it's very easy to ignore it and just go from day to day, you know, like you said, and then go, oh, where's the money? Where did that all go? So thanks for all that great advice, Laurette. And, you know, we can let you go at any moment. You're welcome to stay. But we're probably going to take a quick 5-minute break here just to breathe, and then we'll reassemble at about 9:02, so that we can do some final stuff and wrap things up. So thanks ever so much. I'm going to stop our recording now.